Yes, in today's income tax class, now we are going to see that a problem on business income from business or profession. This is a problem taken from Girish Ahuja, and this is a quite interesting problem. Actually, strictly speaking, this problem is very simple one, but the structure of the problem is slightly confusing, right? This is a very important one, and we are given with one income statement. Normally we solved the problem so far based on P&L account, whereas in this we are given with one statement. From that we have to prepare the in business income. Okay, no adjustment is given in this, everything is given in that statement. And the most important thing is, in this problem we are going to see that treatment of opening stock and closing stock. So rest of the things are as usual. First we have to take the income given in the statement, which is 27,500. From that income we have to start, we should proceed the computation of a business income. So income 27,500, add inadmissible expenses. First item, provision for doubtful debts, depreciation reserve. See, you please mind it, any amount given as provision for doubtful debt, if it is given in the name of provision or reserve, then that should be taken as inadmissible item, because provisions and reserves are inadmissible item. So provision for doubtful debt is inadmissible, depreciation reserve is inadmissible. Next item is household expenses, that is also a inadmissible item only. And donation to Prime Minister Relief Fund, other charitable donations, any amount of donations paid, whether it is for government agencies or to any approved institutions, those things are considered as inadmissible only. Why? Because donations are treated under separate chapter, right? We are having a separate chapter topic called treatment of donations under 80G. Whereas here we have to take the amount of donations paid, amount of donations given. See, in general you take it as donation, gift, charities, etc. all are inadmissible items. Then next item is account pay check is for purchases 60,000. This is admissible one. We should not take that amount in this statement, because any amount paid in excess of 10,000 is admissible if it is paid in terms of account payee check. If it is paid in terms of cash, inadmissible. Otherwise, if it is paid through account payee check, is admissible only. Then next one is audit fee 20,000 paid, including expenses on income tax assessment. Income tax is inadmissible, whereas assessment paid is admissible only. Okay. Then patent. Patent purchased 90,000 during that previous year, and 20,000 was paid in terms of cash. Balance of 70,000 paid by an account payee check. See, first 2 points you should know. Two things you should keep in mind. First one, purchases of patent. Any patent, trademark, then technical know-how acquired, that amount paid is inadmissible, and the same amount is eligible only for the depreciation. Previously, 5 years back, we had the concept of patent acquired is eligible for deduction, whereas now it is eligible only for the depreciation at the rate of 25%. So purchases of patent are given as acquisition of patent, trademark, etc. Or first you should take those items as inadmissible item, and the same is eligible for depreciation. So here also we have taken admissible expenses, depreciation at 25% on 70,000. Why we have taken only 70,000? Because 20,000 paid in terms of cash, balance 70,000 is paid through account, that is account pay check. Okay, so based on the concept of any amount paid in excess of 10,000 is disallowed, inadmissible. So we are taking 70,000 as only the eligible amount for this one. 25% is depreciation is calculated for that. Another most important thing here is incomes credited in P&L account. That you know very well. Bank interest on FD, interest on post office savings, interest on unit, interest on UTA units 2000. These three items are inadmissible income because interest on FD is non-trading income. Interest on post office savings is also non-trading income. Interest on UTA is income from the investments. Okay, so these things are non-trading item, so it is not connected with the business of the company, so it is a inadmissible income and we have to deduct it from the total income. Then another most important thing is the treatment of opening stock and closing stock. Two things you should keep in mind. Two things you should know. One is opening stock is overcosted, that is overvalued, how that should be treated. Opening stock is undervalued, how that should be treated. Likewise, closing stock is overcosted, that is overvalued, then how that should be treated. Closing stock less undervalued, how that should be treated for the ascertainment of income from the business or the profession. See here, first point, opening stock is cost plus 10%. So what they have taken the value as 110%, that is cost plus 10%, overvalued. Well, if it is overvalued, then the value comes to 66,000, sorry, 66,000. So what we have to do, we want 100%, but they have taken 110%. So 66,000 into 100 by 110, the result comes to 6,000 rupees. How to treat that 6,000 rupees? We should add that amount of 6,000 with the profit. Why it should be added? Very simple. You have taken the value, cost value, if it is opening stock, if it is overvalued, that reduces the profit. Why? If it is just, you imagine the P&L account. Debit side you are having the opening stock, right? Credit items minus debit item, you are getting the profit. If that debit item is overvalued, your profit will be less. So to rectify that, we are taking opening stock overvalued, that 6,000 should be add back with the profit. Then closing stock. Let us imagine the same old example. Closing stock is taken in the credit side. Add credit side minus debit side, you are getting the profit. If that credit side is added, okay, your profit will get the increase. Whereas here, that credit side is cost minus, that is undervalued. Okay, it is undervalued. So closing stock is undervalued. So your credit items are undervalued. That tends to decrease your profit. Okay, so that's why we are adding the value of closing stock, that is undervalued closing stock value should be add back with the profit. Okay, you please try to understand by framing that example what we discussed now. Opening stock cost plus, then we are adding. Closing stock cost minus, then we are adding. Why? Because if any of the item is reduced in credit side, that reduces the profit. Any of the item increases the value of the debit side, that reduces the profit. So accordingly we gave that treatment. Okay, then now another one item, inadmissible income, that I have explained. The next item, which is inadmissible expenses. Why? For patent, 70,000 is paid through account pay check, 20,000 is paid through cash. So we are considering only 70,000 into 25%. See, I told you, any amount spent for the acquisition of the patent, trademark, technical know-how, it is qualified only for the depreciation at the rate of 25%. That we are charging. So if you apply these things, then finally your business profit is supposed to be 2,15,000. Okay, this is one of the important essay type question. Similar type of problems may be asked in section C type.